Good morning, everybody. It's the 27th of June. We are Signal Centre Talking Bull. I'm Joe, joined by Steve. Welcome back, Steve.
Yeah, morning. Yeah, how
Hey.
is it? It's been a long while since we've both been here.
It has. I don't think we've had a break like this since we first started doing this, which was 866 episodes ago. So
Oh, it
Steve was
makes me
away
feel
last
old.
week celebrating his wedding anniversary, and I was away in Cyprus, but back at it today.
Yeah, yeah,
Looking
and
forward to it.
a few things have changed in the market, I suppose.
Yeah, quite possibly. I've got to admit, I haven't actually spent too much time looking at it because I've been too busy, but we'll see if we can muddle through today and bring ourselves all up to speed with what's happening. As always, if anybody's watching, first of all, thank you for watching. And secondly, if you've got any requests or markets that you're interested in getting an update on today, please feel free to post them up in the chats or the comments, and we will do our best to cover as many as we possibly can. So let's kick off then with the headlines to start today. And I need to bring those up. I'm a bit out of touch here. I forgot where to get all the details from.
Forgot what buttons to press.
Yeah, give me a second. Okay, um, so we had the German business confidence numbers yesterday. They dipped. The IFO business confidence dipped to 88.5 for June from a revised number of 91.5 previously, which was below the consensus forecast of 90.7. The Bundesbank was slightly more positive. According to the Bundesbank, the German economy has bottomed out with slight GDP growth expected for the second quarter. The bank added that wages are rising strongly, which will support disposable incomes. The bank also expects that inflation will slow further in the coming months. Risk appetite stabilised a touch yesterday. Confidence, however, did remain fragile overall, with further losses in equities and unease over the threat of interest rates staying higher for longer. There was limited improvement overnight, especially with hopes that the Russian situation was stabilising. Developments in Russia, however, will continue to be closely watched. The dollar retreated slightly yesterday. There was further verbal intervention from the Japanese Finance Ministry on Tuesday. There were also reports that the Chinese state banks were selling dollars to underpin the yuan, and these two factors curbed the scope for further dollar buying in global markets. The ECB conference will be watched closely today. The one of the members will be at a conference, and the rhetoric will be closely watched, especially as there will be participation from Federal Reserve and Bank of England officials as well on the ECB Council. And we've got some inflation data today from Canada. The latest numbers will be released later on today. The consensus forecasts are for a sharp decline in the headline rate to 3.4% from 4.4% previously, with the core rate declining to 3.9% from 4.1%. Thank you, everybody, for the posts. Great to be back. And yes, we'll cover all these markets shortly. So just a quick check. We'll be looking at gas, we'll be looking at oil, we'll be looking at DAX and Euro US dollar, as well as dollar CAD. Any others, please feel free to post them up and we'll get to them shortly. But Steve's going to kick us off with a look at cryptocurrencies to start.
Yeah, we won't spend too much time on cryptocurrencies. It doesn't feel like a cryptocurrency analytic channel, but there's been a few developments over the past couple of weeks, which I've picked up on a holiday. Still, you can't get away from it. BlackRock are creating an ETF based on spot Bitcoin. That's even after the Coinbase, obviously one of the major exchanges, has taken a bit of a rap across the knuckles from the SEC. I think that was the case anyway, but obviously there's a little bit more going on in Bitcoin, especially if BlackRock are getting involved. One of the well, they are the biggest investment company in the world. So yeah, I think wherever they're going, and if they're sort of like also shouting about it over the headlines, then there's something going on, and you can't ignore it. Let's take a look at the weekly chart. Really, oh, that's our trading account. That's not looking too healthy. Let's take a look at the weekly chart. Now, the weekly chart, we've got this major bottoming formation, which looks like it's playing out really, really nicely as well. The measured move target for this is a move to 35,000 in Bitcoin. We had this head and shoulders formation. We had the break up through the neckline. It stalled at 31,000, retraced and retested the neckline almost to the pip. over a pip, but yeah, the levels look like they've held pretty well. That 25,400 support level has done its job, and that was followed by a bullish hammer candle on the weekly chart. And the following week, you can see the reaction higher has catapulted prices, and yeah, it's looking pretty good. Trading at 30,342. That looks bullish to me. Looks like 35,000 could be taken out quite quickly. Yeah, so very positive. Don't really see much of a need really to go to the daily chart just to show again how positive it is. Momentum is stalling a little bit, maybe posting a bullish flag here where price action has accelerated very quickly, just pulling back, getting its breath before pushing on again. So Bitcoin, for the first time in a long while, I'm bullish on Bitcoin. So that's the time to sell it. Only joking. Other ones, XRP really hasn't had the reaction that I thought it would. It has on the daily chart. We had, sorry, keep bringing that up. On the daily chart, we had this inverse head and shoulders formation, which played out, hit the measure move target, had a spike up to, what was a high there, 56.5 cents on the 13th of June. That's the day before I went away. Since then, we've pulled back to 45.60, been up to 52.70 and trading below the 50-cent level. 47.80 we're trading at the moment. That still seems to be under a little bit of pressure. Let's take a look at commodities, which are being asked for. We'll take a look at Steve's commodities because I know how they're set out. Weekly chart, we've been under pressure since failing at the all-time high the week of the 1st of May, and last week was a very negative week for gold with dollar strength obviously flowing in. We've had a little bit of a pullback higher this week. We obviously got a sell off to the lows. Then we had a lot of shenanigans going off in Russia, Ukraine story with the Wagner Group turning around and doing a bit of a U-turn on sort of like marching back against Moscow, and that all changed. And that was sort of like just like basically a really safe haven drive, the sort of like rally higher that we're seeing this week with a lot of sort of unsettling things going on that side of the coin. So but overall the sort of like the dollar really still under pressure, and this isn't just to do, sorry, the gold is still really under pressure. This isn't really just to do with dollar. Dollar is under a bit of pressure compared to where it was, and gold is moving lower. So overall, we're looking at a bit of a negative story in gold. On the daily chart, we've broken down below the cloud, broken down below support. That support level was around about the 1935 area. Trading at 1928, we have been down to 1911. Next support below that is probably around $1,900. That's the psychological level. Then 1886, the major support really all the way down at 1804. So yeah, overall we've got this like double top formations played out really nicely, and yeah, still in bearish territory on gold at the moment. Looking like a bit of a crossover maybe on the MACD there. So be aware of that. Crude oil. Looking at the daily chart in crude oil, we've had a bit of a reaction higher, and we've got now a new support level really to look at on the WTI crude oil. That's coming in around about $67. We flirted with that last week, or yeah, this doesn't seem to be updating this chart, Joe. This crude oil here. We're definitely more than the 16th of June.
I hope so.
Unless we've gone back in time.
I don't know. Maybe there's an opportunity there.
Yeah, don't know why my crude oil isn't updating there. Let me see if I can get another chart up with commodities. Right, this is a crude oil chart. This is up to date, and as you can see, we had that $67 level that I've just highlighted on the charts here. And we flirted with it a third time. So we even got price action dipping down to there just on Friday, and prices sort of like a bit more buoyant. Resistance coming in up at 72.75. It seems to be like narrowing a little bit here. Price action. We've got this downward trending resistance. in here. There's the resistance. This is the support. Bit of a triangle formation here to watch, to look for really the next move. Everything narrowing really, and still under a bit of pressure, crude oil. Levels to watch really on the upside, probably around $72.72, and on the downside, as I say, $67. Brent crude oil, different kind of levels. We've got support coming in at 71.40, and again we've got this downward trending resistance to just keep an eye on, which comes in around about the $76.50, and above that we've got 77, which is horizontal resistance. So they're the levels to watch really on crude oil. I'm still getting bit by mosquitoes, I think. Yeah, so that's about it on the commodity front. You can take a look at the euro dollar and see what the dollar's doing, Joe, and then we can dive into a few indices.
Yep, let's do that. So looking at the dollar index to start with, so this can set the tone for the other currencies that we're going to look at. We can see that over the last few sessions, there was a decent attempt at a bit of a rebound there from the dollar index as we saw equity markets start to wobble a little bit. We saw that there was a bit of a rise in the dollar. That move on Friday was pretty nice indeed. But over the last couple of sessions, we are now retreating lower, as we can see. So the support is coming in around 102.23. Looks as though we're probably going to see more sideways price action here on the US dollar overall. It has to be said that it is still trading in a downtrend, but potentially still trying to form some sort of bottom here, but no immediate signs of that occurring just yet. So support here, 102.23, below that, potentially down to 100.82. So let's take a look at Euro US dollar. We can see here that this was trading within a bullish channel for a significant period of time. We then saw this decent correction lower as prices move lower within this kind of wedge formation. Then we saw a break to the upside, and prices have moved quite nicely ever since. But now we're into a big area of resistance once again on the dollar index, highlight here by this sort of rectangle pattern. We can see here's a number of highs that date back to February 2023. So interesting area there. Need obviously to get through that if we are to see higher prices on the euro dollar. In the short term, looking at these candles that we formed, we can see here that we posted a high on the 22nd. Then we posted this pretty nasty candle on Friday, and attempting now maybe to retest the low of that candle from the 22nd, which comes in at around 109.47. So potentially some resistance in and around here, yeah, overall pretty range bound, I think, is the expectation with euro US dollar. Okay, let's take a quick look at cable. That's broken to new highs, taking out this resistance at 126.66. If we go back to the left-hand side, we can see there's a previous level here from May 2022. Nice push to the upside. And we've seen a nice kind of pullback to retest this newly formed support as well. So that's holding up quite nicely. Yesterday we posted a doji, and today we're on the front foot, up by almost 0.3% today. So potential for this to continue moving to the upside. The next level to target on the upside is around 129.82. We can see some previous lows in this region here, which is expected now to act as resistance. So all in all, looking pretty positive here. Really large bottom pattern that appears to have formed, and prices continue to move higher. So no sign of that slowing down for now. What else do we have? Dollar CAD. Let's take a quick look at that. So this was trading in a sequence of higher lows, but we broke down through that on the 13th of June, and since then prices have continued to move to the downside. We then had some horizontal supports on offer down to 132.25. We broke down through that level on the 15th of June. We then retested it on the 20th, and prices have continued to move lower since. So if we just clean this up and just turn this into a large range, we can see prices have been ranging within this period for a while. We've now broken down through that, which indicates potentially a large top formation here on dollar CAD. So clearly there's been a very sharp move to the downside. So we will be, I guess, at some point oversold, and it looks as though we are. The RSI is below 30, currently sitting around about 28.9. Not really seeing any signs of divergence at the moment. So that would be, for me, the primary use of the RSI is waiting to see if there's any divergence. So this is when we start to see a bit of an uptrend starting to form on the RSI, something like that, where we see a sequence of higher lows. But at the moment, that's not the case. Prices are moving lower, so too is the RSI. But what we do have is this uptrend line. And if we go all the way back here to the 31st of May 2021, we can see we've got multiple touch points along the way here to validate that this is an uptrend, and we are coming pretty close to that. So there may be some opportunities on the speculative side to think about trying to call a bottom here in the short term at a point where prices will be oversold and into long-term trend support. Let's take a look and see if there's any fib levels to support this as well. So I'm going from the low in 2021 to the highs that we posted in October 22. Let's get some fib levels on. So we've just moved below a 38.2% fib level of this entire range. That was at 132.24. And the next level down is the 50% fib, which is at 129.92. So we'll be looking potentially for a move into this kind of region here. If we then start to see some buying interest form, if we start to see some candles that are bullish take shape, that would be encouraging. And also maybe if we see some bullish divergence on that RSI, that might offer some further encouragement too. But at the moment, it appears to be pretty one-way traffic and looking pretty ugly. But today we've got some pretty big numbers out on the Canadian front. We've got the inflation data which is due out, so that could be potentially a catalyst to turn this around in the short term, or maybe even take it down to that support level very quickly. So do watch and wait and see what happens a bit later with that. Any other currencies to have a look at? Maybe have a quick look at some of these commodity currencies. They've been a bit of a mixed bag of late. Aussie had a very big move to the upside before eventually topping out at 68.99, and then prices have retreated pretty sharply in recent sessions. Bit of a turnaround today. Let's see if it's got the potential to continue moving higher. All in all, though, it looks pretty choppy and pretty range bound. New Zealand dollar, similar kind of thing, pretty choppy, no real clear and definitive trends in place at the moment. Just finish off with dollar yen. So we're talking about this verbal intervention that we've seen again, selling dollars in order to try and keep the currency where it is. And as we can see, it continues to push to the upside, no slowing down there. If we look at some of the other dollar currencies, a bit of a mixed bag, but not the case here. We continue to see yen weakness and dollar strength. Push through a 61.8% fib level at 142.49. Now looking for a test of 145.10, which is a previous support, now term resistance. And then above that, we have a 78.6% fib at 146.65. Okay, over to you, Steve.
Thanks, mate. Take a look at indices now. Start with FTSE. FTSE's posted a nice bullish hammer yesterday. Markets reacting from after posting a low down at 7,400, reacting higher and marching on again today, trading at 7,487 already. So that looks like a nice little turnaround in place, nice little bottom to start the week. And the same on DAX, that traded down into the Ichimoku cloud support, posted a little bit. It's a bit of a doji candle, quite close to a bullish hammer, and reacting higher this morning. So the dip has been bought into at the start of the week. See if that continues. Support now down around about that 15,700 level, and resistance, we're trading at it now 15,900. Take a look at the US markets. How are they powering on as well? Obviously, over the last week or so, we've had a major setback in the indices, and stalled yesterday. Sell-off stalled yesterday. A low on Dow 33,615 and reacting higher, trading up at 33,826 at the moment. So a nice little turnaround there could get a nice morning doji star formation. Nasdaq. That has pulled back also. The tech sector has been outperforming of late, and last week, Monday's price action did end up giving up, breaking through support at 40,800, trading down 100 points lower than that, but on the front foot this morning. So see if we can turn that around as well. And S&P's similar sort of price action to Nasdaq yesterday, finished the weakest it's finished since 12th of June, since I went away. And yeah, positive day today, almost engulfing yesterday's losses. So looking pretty positive on the indice front after a bit of a setback yesterday. That's about it, Joe.
Superb. Well, let's move it on then to the gun to the head trade. So this is where Steve and I both pick trade ideas live on the stream. A couple of basic rules to follow. We must have stops and targets on these trade ideas. We must have risk reward ratios that are 2-to-1 or better. The trades are closed at 9 p.m. UK time unless the stops or the targets are reached before that. And in terms of risk management and capital management, we are risking 1% of trading capital per trade, and this is on a live account. So Steve, how's the balance looking at the minute? We've been away for a good few days, so we started off with 2k at the start of 2023. We've had a bit of fun in the process, but we are offside. Easily corrected. We just need to get a couple of winners, which is easier said than done, of course. But let's have a go, shall we, Steve? Is there anything that's taken your fancy today?
Maybe just the sort of like the indices, how they've turned around so quickly after they've had quite a decent sell-off, and that we know that the sell-offs in the indices don't normally last very long unless there's a we do get some sort of like real upset in the market. So looks like we're getting a little bit of a reaction higher, although it feels like I've missed the boat on that. 1 second, the dog's about to bark. And the only other thing I like to look at is obviously the commodities. Little bit of a turnaround there on the crude oil after a rally. If you've got something, Joe, you go for it. But
sadly, I don't. I'm just having a flick through now. We'll continue to waffle while we have
while we
a
work.
look. Yeah. Trying to find something.
Yeah, I mean, it feels like the gold has turned around, formed a bit of a base at that 1911 level. Although the reaction higher from there hasn't been substantial. It's
I've got
yeah,
one if you want me to go.
yeah, you go.
Okay, so I'm going to look at sterling versus US dollar cable. And the reason being daily chart, as I went through earlier, nice upward trend, broken through resistance here at 126.66. We've had a nice pullback to that level in recent days, which seems to have found some support and attracted some buying interest today. So looking for a continuation of that on the daily time frame. If we take a look at it on the hourly, we can see this kind of consolidation or this pullback that's in process at the moment. So potentially forming some sort of small bottom pattern, needs to ideally get through 127.49 to really confirm this. But it does seem as though we've got a little bit of a range going on here. And given that the underlying trend based on the daily chart is positive, I'm going to back further upside here. So it's currently trading at around 127.47. In terms of a stop loss, I'd like to go at 127.16. And for a target on the upside, I'm just take a measurement of the range basically and just try and project that higher, which comes in at a target of 128.08, which is not quite good enough for a risk reward perspective. So let's tighten the stop a fraction. Take that to 127.20. So my stop's 127.20, targeting a move to 128.08 on sterling US dollar.
It's about 2.5 to 1. Is that right?
Yeah, just yeah, around that. I think it dipped off slightly in my favour there, which helped.
Yeah. Okay.
No.
So that's on.
Perfect.
You can see that's live there. I was looking at this in sterling Swiss. I was thinking about the opposite of sterling.
Well, let's give ourselves a chance, Steve.
But if you look at yesterday's price action was pretty positive. It looks quite supportive, although it has had a bit of reversal. Maybe it's reversing into a little bit of support here. Let's look at euro dollar. Looks like it's breaking higher. Aussie CAD. I like to look at all four charts at the same time. See if we're seeing similar patterns everywhere. They all look like they're pushing quite strongly higher. Euro sterling's always an interesting one. Euro sterling 85.83 trading. No, don't like anything there, Joe. I might have to go to the old favourite gold. And on the hourly chart, it has turned a little bit more positive. He's going to sort of like be moving into resistance. Let's take a look at this. Is this forming a bit of a bottom at the moment? Possibly. We need to get a sort of like a decent move out of this if we're going to have the stop anywhere close as well. Right, the stop needs to be below 1923. So something along these lines here. Let's see if we can get this on. We want to buy at market. We want to have risk 1%. It's risking 0.96%, which is okay. 1923, the stop, and targeting to move to 1945. That looks okay to me. Not quite risky. Let's see if we can risk 1% on this. It's not far away. Target is a bit higher than that, so, and the stop are slightly below that 1923 level. So stops at 1922.67, target to move to 1945.16, and we're long of gold, just based on the hourly chart, really, just seeing a little bit of a bottom formation taking place there.
Okay, good luck. In terms of data today, there are a couple of bits out that we need to be aware of. So we've got the Canadian consumer prices, as we mentioned, the inflation number that's due out at 1:30 UK time. Then at 3 o'clock, we've got US consumer confidence. Overnight, we've got Australian inflation data, which is due out at 2:30 AM UK time. For the rest of the week, we've got more inflation data, this time from Germany, with their consumer prices due out on the 29th, and on the 30th, we got the US PCE prices index, which is another inflation metric. So plenty going on. Nice to be back. Thank you for those that watched today. We will be back on now, up with some steady streams. So we hope to see you again very soon. Until then, everybody, have a fantastic day.
Cheers all.
Bye-bye.